What's up guys, it's Darren Jackson. Welcome back to the channel, or welcome if you're new. Definitely glad you could come by. And again, if you're not new to the channel, hopefully you've been watching me for over the past year that I've had this channel. And one thing that you might know, if that's the case, is that I love ETFs. I love what they're all about. I really think they're super beneficial for new investors and for anybody overall. And with that being said, today we're going to talk about yet another ETF. Now this ETF falls in the same family of ETFs like the one I talked about last week, being in the ARK family. But this one is ARKK, which is the ARK Innovation ETF. Now in the previous video when I talked about ARKF, I elaborated more on the definition of what ARK and the family of ARK ETFs is all about. This particular ETF, pretty much the definition of what ARK is all about. ARK is a specific type of family of ETFs that's led by Cathie Woods, who's been a huge name in the stock market, and her amazing group of people that are doing all this research. And what they do is they're essentially creating this huge portfolio of companies that are disruptively innovative. That's their target goal, disruptive innovation. The best way for me to explain what disruptive innovation is think about a lot of the companies that are out currently. A lot of them are within one specific sector. They're honing to that sector. Apple, for example, is the largest market cap company in the stock market as of today. They're one of the most popular companies in the world, and they're primarily focused on the tech sector. You have Johnson & Johnson, which is like in medical and healthcare. Now, when you have a company that unveils some type of item or some type of product to be sold, and it happens to kind of cover two different sectors, that's where you potentially have something disruptively innovative. Something that typically blurs the line between two sectors. For example, you may have a company that uses its technology to research DNA strands and alter DNA to find cures for different diseases and stuff like that. Those are two different sectors working together to create some major impact, positive impact in the world. And that's what ARK is truly entailing, specifically with ARKK. Now with ARKK, they're primarily going to be targeting companies that are in ARK Fintech, Genomic Innovation, Industrial Innovation, and Next Generation Internet. Now there's actually specific ETFs that are covering each of those individual sectors, including ARK Fintech, which I spoke about last week, and if you haven't seen that video, I'll leave a link right up there. But ARKK entails all of that. Every single dollar that you're putting into this ETF is being divided amongst multiple disruptively innovative companies with the intention of catching them early before they explode and impact in the world, and therefore their market cap and therefore the stock price, in hopes that you're making a lot in return. So with that being said, let's talk about some of the details with ARKK, specifically starting with the sectors and some of the top stocks on their list. So ARKK has a lot of sectors within its portfolio, but the top three right now are technology, healthcare, and consumer cyclicals. By the way, guys, for a lot of you guys that may not know what consumer cyclicals are, which was me at one point, that's basically a company that does well during certain business cycles and certain economic conditions and doesn't do so well on others. For example, this current situation that we're currently in, that was at the peak of its madness at the beginning of last year, made companies and specific companies not do so well at the beginning. Gyms, especially restaurants and stuff like that. Those are consumer cyclicals, but when economic society and society in general is doing well, they typically do well. So those are the top three sectors. Now, the top three companies is pretty interesting. Number one is Tesla. We've heard a lot of news about Cathie Woods and her opinions on Tesla and her price point, or her assumption of what the price will be in a couple of years. She's all in on Tesla. Following Tesla are other companies like Square, Teladoc, and Roku. And all these companies have a pretty major similarity. Maybe besides Roku off the top of my head, because they're just like an on-demand cable substitute company, kind of like Amazon Fire Stick or Google Chromecast. But Tesla, for example, is a disruptively innovative company. Despite how extremely speculative it is, if you look at their PE ratio on Robinhood, it's in the thousands, but regardless, they're doing a lot of good things. But the disruptively innovative part is what's really important. Teladoc is a medical company that allows you to have virtual health assistants, which I think is super convenient in the times that we're in today. And Square is a company that predominantly small businesses use to sell their products, whether it's online or, like I said in the previous video, if you've gone to some stores and seen the little square thing that you'll swipe your card through, or even the little mini register, touchscreen register that they have. That's mixing technology and finances. These companies are disruptively innovative and hopefully will continue to change the world as they have been today. Now, with that being said, we're gonna go into another section with the financial aspect of it. And just like the last video, there's two things I wanna focus on. One seems like it's obviously the theme with every single active ETF within ARK. And the other one might unfortunately or fortunately be a theme. It just depends on how you look at it. So the first thing is the expense ratio. Now, before we get into that, keep in mind ARK stands for Active, Research, and Knowledge. So the best way to picture this is just imagine Cathie Wood and her entire team just constantly behind a computer researching different companies that are disruptively innovative or potentially will be disruptively innovative in the future. And right now, their share price or their price point's fairly low, but they're imagining that in the future, this stock price is going to shoot up even higher within the next 5 to 10 years or so. So with that being said, the stocks within this portfolio of ARK stocks are going to be consistently changing to make sure that every dollar you put in can be maximized to its fullest potential. And that comes with a price. That price being the expense ratio. So for the expense ratio for this particular company is 0.75%. That basically means for all you money makers out there, if you actually put $10,000 a year into this particular ETF, you'll be charged $75 for the expense ratio, which isn't a lot, but if you're the type of person that's a real stickler on spending the extra money on an expense ratio, then there's a lot of other ETFs that'll be more beneficial for you, such as VTI, which expands throughout the entire stock portfolio. Granted, there's not much adjustment that specific ETF has to be done, and there's not a specific specialty that it has. It's just super diverse, which is beneficial on itself. But considering the amount of research that has to be done is very minimal, the expense ratio on that one's really minimal. The benefit with an ETF like ARKK in particular is that even though, yes, you are paying a bit more on the expense ratio, at the end of the day, the goal is for the capital gains to exceed that by a long shot, so that the amount you're paying every single year is almost virtually invisible or meaningless if you don't think about it. So I think the ends kind of justify the means. Now, that being said, the other thing is the dividend. Now, for those of you guys that have been watching my YouTube channel for a while, you should know that I love dividend paying stocks. I've fallen in love more with growth stocks that also pay dividends, like Apple, which is probably one of my favorite stocks up until this point because it's a highly growing stock over the past X amount of years and also happens to pay a dividend. With that being said, I can't really tell if this ETF pays a dividend. I couldn't really tell with ARKF, and I can't really tell now with ARKK. That's basically because if you go on different sources, they'll tell you different things. I think Robinhood tells you it has a dividend yield. MarketWatch tells you it paid over a little bit of $1, I think, annually. Dividend.com tells you that it paid 9 cents, I believe, last year. And other websites shows you that the dividend yield is nothing. So I really don't know what that means. So basically, if you're going to invest in ARKK, in my opinion, just imagine that it's not a dividend yield stock and look at it solely for the growth, which is why I think this, along with plenty of the other ARK ETFs, are super beneficial. The companies that they are attacking, being disruptively innovative, have the opportunity to make so much money in the future, therefore making you so much money as you invest into them. And a lot of the little things that they're doing, Tesla being the most popular electric vehicle in the world right now, working on their batteries to make them cheaper, therefore making the cars cheaper, making them more accessible, working on their infrastructure. Square being a company that's now getting into cryptocurrency, allowing you to invest in Bitcoin and Ethereum and other cryptocurrencies, understanding that it's a big deal for them. They've also put a lot of their net worth into cryptocurrency to help support that cause with the belief that cryptocurrency is the future. A lot of this stuff is super beneficial, not just for now, but in the near future. So this is definitely, in my opinion, a long-term hold, despite the fact that it doesn't necessarily pay a high dividend, maybe not one at all, and despite the fact that the expense ratio is fairly high. You have to think about what you're getting in return. I think if this is a 5 to 10 year hold, it's gonna outweigh anything in the future. So that's pretty much what I think about that. This might have been a fairly short video, but hopefully you guys gained some more knowledge or information, or at least just my perspective of it all. Let me know what you guys think in the comment below. Do you like ARKK in this example? Do you like the whole ETF family of ARK in general? What do you guys think about it? What's your favorite ETF if it's not one of these? And speaking of other things, make sure you guys watch some of these other videos, which I hope help you guys and your investing journey as they have in mind. I sincerely appreciate you guys watching, and until next time, take care.